Hi, this indicator we're talking about now measures the strength in the marketplace. So strength is measured by how much price has moved in a certain direction and how far it's going to move before it turns back. So for example, as you can see here, price has moved very strongly down and it's actually now started to move back and move down and move back. And we can use various indicators to determine these areas where the market is likely to pull back. One of those is called an RSI, Relative Strength Indicator. Let's put one on. So Relative Strength Indicator, RSI, here we go. Keep it at the same standard settings, and what this does, this measures the levels of the marketplace. So if we was to plot this line over the top of this, it usually marries up. So as you can see, we've got a drop down here and a rise there and a drop down there and a rise there. So what we can also do on here is we can plot levels of where the relative strength indicator could be considered to be at its highest, and also when it can be considered to be at its lowest. And therefore we can look at maybe creating a strategy when the RSI is below a certain level for a buy, and when it's above a certain level for a sell. Let me put on here a couple of lines, horizontal lines, and we're going to put one on at the 70 level, and we're then going to put another line on at the 30 level. Okay, just double click the lines, make sure they're set up the right number, 70, apply, and 30, almost there. So we can see that when price is below the 30, it's considered to be at the bottom of the market, and then we get the move up. And when price is at the top of the level, price then tends to start to fall. And as you can see here, you know, we've got market levels here at the bottom. So when price crosses the bottom band or the bottom level, price then goes up, back up to the upside. So the RSI is what we call an oscillator. It sits beneath price here. And that's how you set it up. These numbers that you use are not set in stone. You can put on there a 50 number, but this is really a percent range, so it's actually going from what we consider to be an oversold position here back up. So you can actually grab some pips on the way back up again once it starts to cross. So that's how the RSI is used on a chart. Let me show you how we use it on Tekton. Let's say we want to create a strategy using an RSI. So what we can say is when the RSI, so we click it here, SI, and the standard period is 14, crosses below the number 70. That corresponds with the one we just showed you on the chart, but these numbers can be anything. And the action would be to sell. And that's created the algorithm. That's simple, using the RSI. There's the RSI there. So what we're saying is when price crosses below the RSI 70, for example there, we're looking to sell. We can now add the buy. So the same thing, when RSI 14 crosses above the number 30 this time, and again these numbers can be anything, the action is to buy. Confirm. Remember, you can add other indicators just to the end of these conditions, so you can add longer conditions, but for this purpose, of this exercise, I'm just showing you how to get the RSI that we've showed you on the charts here into Tekton.